Hey everybody, we're live. It is the first live stream of 2022. Want to welcome everybody into 𝙂𝙊𝙇𝙑𝙀𝙍. I am your host, Robert 𝙂𝙊𝙇, and we have a lot of you guys riding shotgun in the chat, and we'll get to you guys in just a few moments. Thank you everybody for joining. We have got a poll running up as we wait for people to join the chat on the live stream. How are you protecting against debt collapse? Are you doing it via cash, precious metals, cryptos, or have you done your remote prepper compound? Since I know we have a lot of preppers in the audience, answer the poll and tell us how you're doing it. 87% so far out of 15 votes say precious metals. We do have some votes for cash and remote prepper compound. None for cryptos yet. I know I have to have some crypto people in my audience. So that'll be interesting to see how that poll goes through this live stream. In a few moments, after everybody gets loaded into the chat, we're going to talk about Evergrande, their shares halting, all of the problems that they're having. I'm going to show you a news story, kind of breaking it all down for us. And we're going to talk about what that means. I suspect that means we're at the beginning of the debt collapse. This is the shot across the bow, if you will, canary in the coal mine, whatever colloquialism that you favor and want to use. I think we're at the very front of the worldwide debt collapse. It is starting right now. Evergrande is the symptom. It won't be the cause, it'll be the symptom. The cause will be the fiat monetary system, the fiat debt system that was put into place originally in 1913 in the US central bank and central banks throughout Europe in the 1800s. And then all that implies, especially after World War II and the Bretton Woods Agreement. And we'll get into that here in a few moments. As a reminder, we got a poll up. How are you protecting against debt collapse? Pick your favorite answer out of the four: cash, precious metals, cryptos, or remote prepper, camp, or compound. All of those could be legitimate answers. Thanks everybody for tuning in. We have John Bethea here. Cheshire Yeoman is here. Spiked Head Die Crack has joined us. Ralph Potts is here as always. Thank you, Ralph, for joining. Chase Wilson is here. We have Kenneth Martin, who says remote prepping also. Dude Boy is here. Tom Stencil is here. Colin Gooch is E, all the above. That's a great answer, Colin. I appreciate that. And thank you for joining. Vedant is here. Jeff 702 says that Evergrande's being protected by the CCP. I agree with you. It is. And their entire system is being protected by the CCP. Kristen Rowe, my goodness, first time I've seen you in the chat in a while. Sorry if I missed you. Welcome back. What's up? Glad to see you here. One of my favorite people saw us in August in Grapevine, Texas, when we had our Money Metal Summit. I love talking to her, like to meet her again. Of course, we're having more live events this year, Kristen. So if you can make it, I know you're traveling all around the country. Come please join us. Dude Boy is here. Welcome everybody in. We got about 70 people, so we'll go ahead and get started. Yes. This is the first live stream of the year for Gold Silver Pros. Got the cowboy hat on, ready to roll. Cowboy Metals Live. We broadcast from the great state of Texas and we take no bullshit. And we're going to continue that in 2022. Here we are talking about Evergrande. Their shares are halted. And I believe this is the beginning of the worldwide housing bubble collapse. We'll get into it. Let's get into, as I move about my various control panels and windows here, let us get into the share screen and let's see what we got. Before we get into that, I got a quick message for those of you wanting precious metals. Yes, finally, all of you have been asking me. I have got some affiliations up if you want to help the channel and get your precious metals at low prices. We've negotiated deals with all these companies. The one I want to highlight today, if you go to the website right here, goldsilverpros.com, and you click on precious metals deals, you realize there are 4 options there before you. All of them good options. Today, we're going to highlight Miles Franklin. They come on the show all the time. Andy comes on the show. They're good friends of ours. I've ordered through them several times. I trust them. I think they're great. And they're going to give you the best price possible. When you order through our channel, just click on Get Access right there. It takes you to a form, you fill it out, and one of their customer account managers will get to you in 48 hours. Just wanted to let you guys know if you want to get your precious metals, that way you'll get them at a good price and help out the channel at the same time. All right. Moving past the advertisement into the content, China Evergrande, shares halted, firm to release insider information or inside information. This is from Business Standard. This is a good website, by the way, if you want to look at international news. I look at a bunch of websites, but this one's really good coverage around the world. So as we know, Evergrande is struggling to repay more than $300 billion. That's billion with a B in liabilities. That's an absolute ton, of course. And what happened was China Evergrande Group shares have been suspended from trading on Monday. That would be yesterday, pending the release of inside information, the embattled property developer said without elaborating. So I think the government is looking, and the financial authorities in China are looking for, hey, what are you guys actually doing? That's what inside information is. Tell us how you're running your shop. Who's invested in you? What's going on with Evergrande? They're starting to investigate what the hell is going on, and they've halted shares in the meantime. That's not real good for Evergrande. It probably means that the government and the financial authorities there think that they're not legitimate, or that there could be some goofiness going on with the investments. Maybe there's a little Ponzi scheme going on. Maybe some promises were made that weren't kept. Maybe the company expanded too much and couldn't keep up with obligations. Who's making the money off this bad boy? Who took the money and run? I think that's what they're looking for. It says here, Evergrande, the world's most indebted developer, is struggling to repay more than 300 billion in liabilities, including nearly 20 billion of international market bonds that were deemed to be in cross default by ratings firms last month after it missed payments. The property developer missed new coupon payments worth 255 million due last Tuesday, though it has a 30-day grace period. So they defaulted twice, although not technically because they have a grace period. Sort of technically, but not technically. But this is the second month in a row they could make their coupon payment. That's basically a default. They just get 30 days. They set up a risk management committee, blah, 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 and they're doing all this stuff. In addition, it's not stopping there, ladies and gentlemen. We've got more. And if you guys have questions, leave a super chat or leave a regular chat down in there, and I'll try to find my way through all the comments to get to the non-super chats and answer them as much as I can, because during live streams we always do Q&As. All right, local media reported over the weekend a city government in the Chinese resort island of Hainan has ordered Evergrande on December 30th to demolish 39 residential buildings within 10 days due to illegal construction. So not only is Evergrande not finishing their projects, not getting enough money in, maybe running a giant Ponzi, they were doing construction outside of local zoning codes, meaning it was unhealthy, unsafe, not fit for purpose. These buildings stretched over 435,000 square meters, the reports added, citing an official notice to Evergrande's unit in Hainan. And of course, Evergrande did not respond for comment. Of course. On Friday, Evergrande dialed back plans to repay investors in its wealth management products, saying each investor in its wealth management product could expect to receive 8,000 won, which is 1,257 US per month as principal payment for 3 months, irrespective of when the investment matures. So they're making all sorts of promises to keep people from just absolutely banging down their doors. And we'll see in a minute where people are actually banging down their doors. We'll get to that in a moment. It's getting really bad. The pitchforks are out on Evergrande, but they're making whatever promise they can to keep the stuff from hitting the fan. And it's not really working, as you'll see here in a moment, but they're promising anything. We'll pay you back principal regardless of what you invested over the next 3 months. Well, if they can't pay their bond coupons, are they really going to be able to pay back their principal? I'm not so sure that's a chance in hell of that happening, but we'll have to see. The move highlights a deepening liquidity squeeze with the property developer. Yeah, you think? A quote here from Tiger Faith Asset Management, Kanita Hung. She's the strategy director. The market is watching the asset disposal process from Evergrande or pay its debt, but the process will take time. Yeah, no kidding. And the demolition order in Hainan will hurt the little home buyer confidence remained in the company. What little home buyer confidence remained in the company? Evergrande last week said 91.7% of its national projects have resumed construction, except for the ones in Hainan, which have been shut down to unsafe building practices, according to that location. Many projects were halted previously after the developer failed to pay its many suppliers and contractors. Shares of Evergrande shed 89% last year. So shares have collapsed. Bond defaults 2 months in a row. Hainan ordered them to collapse buildings, tear them down because they were so unsafe. Stock shares now have stopped trading, and we're not done yet. Because as you're going to see, ladies and gentlemen, the pitchforks are coming out. Yes, there are protests in front of the building in which the police got called out to prevent violence and people storming the building. The pitchforks are officially out. All right, here we go. Back to the share, ladies and gentlemen. Let's go back and you're going to see this really cool video. I'm going to share sound on this one. And we're going to show you where the protesters are out in force. Here's a video on Yahoo News about Evergrande.
Give us our money back. That was the demand from protesters at Evergrande offices in Guangzhou on Tuesday. Investors gathered there amid worries that their returns would be sacrificed to keep the company afloat, though some said they'd been prevented from getting to the office building. The police stopped us, says this woman. The protests were sparked after Evergrande last week dialed back how much it would repay investors in its wealth management products. More than 80,000 people have bought such offerings over the past 5 years. That includes Evergrande employees and owners of its properties. They were lured by the promise of yields approaching 12% and gifts including Gucci bags. Tuesday actually saw Evergrande shares jump, however. They rose as much as 10% during the day's trade. That after the firm played down worries over an order to demolish some buildings at a massive resort development. Evergrande said that would not affect the rest of the project in Hainan province. Even so, markets remain on alert over a company weighed down by over $300 billion in liabilities.
Yeah, so basically what they're saying is Evergrande's screwed at this point. The pitchforks are coming out. People aren't too happy. And that's where we are. And the big question is here, is it just Evergrande or is it more than that? We know that companies offshore or invested in Evergrande. There has been rumors flying. I have not confirmed this, but I've heard it from multiple sources. Cannot confirm that Tether has a bunch of Evergrande or has some Evergrande. So would that blow up Tether when Evergrande blows up? Of course, Tether is a Ponzi scheme anyway. How many people, who, what, when, and where invested in this Evergrande? It's not just in China, it's global. Which wealth management products? With which banks? I think there was a report out in Zero Hedge some time ago when the Evergrande fiasco started, some month or two ago, that was talking about the banks that had the highest exposure. I think HSBC was mentioned in there. I forget the others, maybe Morgan Stanley, I can't remember, but there are global banks that have exposure to the Evergrande mess. So what's going to happen in bank balance sheets as $300 billion US in investment starts to crater in China? And remember, it's not just Evergrande, it's Cynic and I think 3 other property developers that are in trouble. And it's really just a sign. You know, we talked about 10 years ago how China was building hidden cities, or not hidden cities, but cities where nobody was living in them. They were constructing stuff that nobody was living in. And it was, you know, the official word was that the government was building that for future growth. But you would have like shopping malls and apartment buildings and parks and all that stuff built and nobody was living there, like ghost towns or shadow cities. You know, there were signs back then that this stuff was going to hit the fan in the housing market in China. And, you know, it's no surprise. It's like a $62 trillion market in China. It's the biggest single asset class in China. And it's going to be the first bubble to pop. And the question is, when that $62 trillion asset class begins to pop, how's that going to affect the rest of the economy? I think it's going to be pretty damn nasty. And that's why I put in the title, Worldwide Housing Bubble Begins Collapse. This is the first. It's not going to be the last of the end of debt and this fiat system. I think it's coming. Now, I think it'll take a while to play out. It'll take a couple of years. I've said that, I think. Assuming all of the things that China and the state-owned entities are doing to try to stem the effects of this, and what other central banks around the world will do as well to help stem the effects of this becoming a contagion and stretching out across the global economy. I think central banks will get involved, commercial banks will get involved, governments may get involved, but they're not going to be able to stop it because it's just a microcosm of the whole screwed up system. And I think it's apparent now, you know, first couple of days of 2022, the whole thing's going to come down, and not just in China. The whole housing market is going to come down because everybody's invested in everybody. And once those debt issuances start to default and it affects banks' balance sheets, it's going to domino through the system, and it's going to take bigger and bigger portfolios with it. That's what we saw during the mortgage crisis. And all they did was paper over with debt and fiat. But now that debt and fiat that was printed around the world has now actually created a bigger problem. So this time it's going to be bigger. It's not just going to be Lehman. It's not just going to be some prime in the US. It's going to be global, I think. Don't see any super chats. Let's go back to the poll. 68 votes are in. How are you protecting against debt collapse? 10% say cash, 82% say precious metals. That's no surprise here on Gold, Silver Pros. But I thought, people would do different things, and they are. 3% are doing crypto, and 4% are doing the remote prepper camp compound. Now, I will say this. I did add that last item because I know a lot of people doing that, but I don't think a lot of people are going to talk about it. I don't think a lot of people are going to come in and say, yeah, I've got a remote prepper compound. I mean, it's one of those things where it's, when you're in Fight Club, you don't talk about Fight Club. When you're a prepper, you may talk about prepping, but you may not give up all of your preps, and that's totally cool. I suspect that number is a little bit higher. A lot of people in our audience are very savvy. Steve Ross Holmes comes in with a super chat. Thank you, sir. I appreciate you. The question is, how do you think disinflation now and possibly future wage and price controls will affect commodities in general, gold and silver? So what happens in the history of price controls is that it causes supply destruction in things that are price controlled. Because when it's price controlled and you can't produce it for profit, you stop. And to reduce inventory carrying costs, a lot of times you get rid of what you already have, to the effect of them killing live animals, okay? Killing cows and pigs, killing chickens. It's happened around the world many times. Even during the Great Depression, leading up to that, the collapse, it happened there. It also means businesses will collapse. I'm going to have a video coming out. I'm taking footage and pictures around my local area of all the things that have now closed up. We're talking chain restaurants, hotels, retail space. And I'm going to do like a little montage video here at some point. Just all the stuff that's happened in North Texas. And I imagine it's worse in other places. There's already supply destruction in retail, in businesses, and things like that. It's already happening. But to answer your question, I do think it'll affect commodities because it will be deflationary for commodities for the short term. And I think that'll be a sign that we have deflation, and then the Fed's going to come print. We're going to have that last melt up. Gold and silver, it'll affect it. Gold and silver will wobble a little bit as all this is going on, but not because there's anything wrong with gold and silver. It's the people investing in the derivative markets not sure which way to go. But then when the rest of the world starts, the stuff starts to hit the fan, people will flock to gold and silver. So don't worry about that wobble as you get to that moment at which gold and silver go up. Okay, that wobble is normal. It's the market trying to figure out what the hell do we do? Should we get in? Should we get out? Where should we go? Ultra Baron comes in and asks the question. Thank you so much, Ultra Baron. COMEX silver registered going towards zero. Will that result in silver squeeze, or will the silver cabal pull another card? That's a good question. The way they control it is not just the amount of physical stocks. Physical stocks don't have a lot to do with the trade. Now, they do have to have the illusion of physical stocks to create the illusion of a legitimate market. It's really the matrix, right? The physical trades are done by these big entities, most of them bullion banks, some producer merchants in there, trading back and forth and playing arbitrage with the physical, but a lot of them are hoarding it now. And that's why you're seeing it come off a registered and eligible and even out of the vault. So it's a good question. It could result in a silver squeeze because it's a different type of silver squeeze. The silver squeeze, when it first came about, affected SLV. It was a derivative product that didn't actually give you access directly to silver according to their prospectus. And when people figured that out, they got out of it, went to PSLV, and actually went to physical. But that's retail. The COMEX market's not retail. So COMEX market's the big players, right? And they play around with derivatives and paper much more than they do physical. So they're still physical there. They're taking it off. And the squeeze, I think, has begun on the big market in the 1,000-ounce bars, the 5,000-ounce contracts on COMEX. But we're not at the point where it's crisis. I think the retail physical short squeeze will happen before the COMEX short squeeze, because I think people are going to get into silver, especially if you think about Wall Street silver and this huge movement. The last 2 years between Arcadia Economics, my channel, Miles Franklin, Wall Street Silver, and some other guys as well, we've raised so much awareness about silver that people are on silver. Even millennials are on silver. They understand what's going to happen to silver. They understand the lack of supply. They understand the demand. They get that it's affordable, even more than Bitcoin, even more than gold. It's affordable more than houses right now. There's going to be such a ridiculous flood into retail silver. It's going to bankrupt it in a matter of maybe a few days, maybe a couple of weeks, maybe a month. But when it happens, probably a few days. Then I think people are going to turn to COMEX, and you're going to have all these people trying to pull it off of COMEX to get it to the people. I mean, if you look at Jim Forsyth and Silverback Metals, he's pulling bars off the COMEX, and he's cutting them into 10 and 25-ounce slices and selling it to people. Okay. Those businesses have already been spun up. And I know 3 suppliers that can get me the 1,000-ounce COMEX bars off the COMEX. They already have relationships, and I can order one and get it. And it's cheap. It's cheaper that way. So I do think that retail demand will slide over to the COMEX bars, but it's going to happen in the small coins and bars first. Then it'll slide over to the COMEX bars. That's a really good question. I'm so glad you asked it. Fazdoll asks, is Rafi Farber trying to get his 5 physical silver bars to load out and actually be shipped? Warrants are just another piece of paper. Yeah, he said he was. And our video that hit about 50-something thousand views at this point. I got to see how many views this got. It was 2,000 last time I looked. He said he was trying to get loadout. Interactive brokers wouldn't let him to do it. So that meant he had to go to another broker, transfer the warrant to that broker and do it. So it takes time. That whole process always takes time. There's know your customer stuff. Then you got to fund the account with at least a little bit of money. Then you got to get people to coordinate. And the market is set up not to do that. It's set up for the big ass bullion banks and some merchants to go in there through a proxy and go grab a bunch of metal at once when they need it. But mostly it's a derivative market. It's not set up for guys like Rafi to do it. So he has intent to do it. Whether he'll actually be able to do it, we don't know. He thinks he can, and we'll be watching that, and we'll get an update from Rafi on the channel. Keith Branson says, I thought Evergrande shafted the offshore bondholders and would try to keep the Chinese home buyers taken care of. Keith, that was their original plan, but there's signs that they're not being able to pay anybody. That's how freaking bad Evergrande is. That's how bad the property development market in China is. It's not about who they want to help. It's about who can they pay off. And like I said, in their wealth management products, they're promising to pay people's principal over 3 months just to keep them from revolting. We saw in the video, people are revolting. They're showing up at the front doors of pitchforks. People are pissed. And those are locals. Those are locals doing that. So I don't think that they're just paying the locals and not paying offshore. Those are locals who are getting pissed off and saying, where's my money? So, I mean, that's what happens. That'll happen when we have bank runs in the US, by the way. When we have bank runs, you're going to have people showing up to Bank of America, JP Chase, credit unions trying to get their cash out. And there's going to be, some protests here in America. That's going to come about. Any other questions? Grow Mechanic is in the chat. Killer's Cars is here. Fontana Renja is here. Thank you for joining. Keith Branson. And I think we've got all of the chatters loaded up. Remember, super chats are open. All right, we went over the Evergrande situation. We got about 220 people in here. Thank you guys for joining. First live stream in 2022. Talked about Evergrande. We talked about how they're demolishing 39 buildings in the Hainan province because they're unsafe. We talked about how their shares have halted on the exchange, at least for a couple of days, because the government's doing an investigation, trying to figure out what the hell is going on. They're looking for the fire. They see the smoke. They're looking for the fire. They're looking for the culprits. I think there's probably going to be criminal prosecution coming. They're promising wealth management principal payments, haven't delivered them. They defaulted a second month on their bonds and they're working through their grace period. I mean, it's a mess. It is an absolute mess. And I think it is absolutely going to get worse. Now, on all of that news, ladies and gentlemen, you have the gold and silver price. Let's talk about gold and silver here in a moment. Gold and silver are doing quite well the last few days. Gold's up to 1814.07, up $10 on the day as I look at it right now on goldprice.org. In fact, how about I just do a share screen on gold price here for you real quick? We are going to share it. And gold is up $10, up $9.94 to 1813, 1814. Silver's up to 2306. You notice silver's not getting quite the same bid as gold, but they're both up. And you can see they've been up, for a couple of days at least. And actually, that's a one-day chart. Let's go to a 7-day chart on both of these. You can see that they've been up, down, down over the last couple of days, but up overall the last week. A couple of positive days. People are getting in gold and silver. And remember, that's the derivative market. It's not the physical market. It doesn't mean that's how much people are buying. It just means that's how the derivatives are trading. There's a slight uptick. They know there's problems with Evergrande and the global economy. They get it. So you've got some positive bid there in gold. It's not going to be big until there's a big collapse. Maybe Evergrande's the one. Will Evergrande pop the gold price? Boy, if they officially announce they've defaulted, that'll pop the gold price. Now, maybe 20, 30, 40 bucks, we'll have to see. But if that spreads, then you're going to see a completely different opinion of the market of gold and silver real fast. And that's what we're watching out for. That's why we watch all this stuff. Now, I'm going to do a breaking segment tomorrow. I'm going to try to get out tomorrow morning. I'm going to talk about a lot of financial data that's come out, put it into one breaking segment about what's going on. I talked last week in the breaking segment about the weakening housing economy of the US. I've got some other stuff to talk about around manufacturing, some other stuff, guys, tomorrow. We'll do a video on that. I'm gonna do one of those breaking ones where I just put the camera in front of me and we put it out as soon as I record it. And you guys can come talk about that. Hopefully we'll get it in the morning tomorrow. Stay tuned for that on the channel. Steve Ross Holmes comes back in. Thank you, sir. Might be a dumb question. Well, I disagree, Steve, because I think you're a smart guy and you don't ever ask dumb questions. He says, what would happen if China just printed enough money to pay off the debt at Evergrande and take over the company? Yes, they can, except for the world is watching. I will say this, back in about 2012, 2013, I did a series on Seeking Alpha, where I looked at the true money supply, which is an Austrian economics from Mises.org measure of true monetary supply. Then I looked at M1 and M2 of the US, Europe, Bank of England, China, other major nations. China, right after the US financial crisis, printed more currency, more yuan than the US, the European Central Bank, or anybody. They were outprinting everybody. There's so much Chinese money sloshing around the system. Okay, not a lot of people know that, okay, because most of it stays in China and their trading partners. It doesn't come as much to the US. It's the opposite. We buy more of their crap. So we're exporting more dollars and more US inflation out to China. China, however, has printed more currency in the last 10 years, just about anybody. So what's going to happen is it's coming to the surface, however, because if they publicly bail out Evergrande, the world's going to watch the Chinese bond market, the Chinese property market, and guess what? The Chinese currency market. And that's going to raise awareness about how much China's been printing. That ain't good for China. That's why the government has flat out said they don't want to bail them out. They know this. They tried to get their other state-owned entities to do it, on the down low, on the deal, under the radar, underground. And I think that's how Evergrande made its first bond payments. Not completely, but made some. I think they're trying to do it again, but the other state-owned entities don't want to do it. They don't want to go bankrupt. It's $300 billion they got to come up with. It's a lot of money. So will China have to do it? I don't know. I think it will call into focus, or bring into focus and call into account all the problems that China has. And believe me, they have lots of economic problems. Thank you for the question. 1812, Andrew Jackson destroys federal bank. Andrew Jackson was my favorite president just because he did that. Thank you, Andrew Jackson. Kristen Rose comment. I appreciate that comment, Christian. And Dude Boy astutely says, 1913, Woodrow Wilson set us up for destruction. I agree, about 100 years later. There we go, ladies and gentlemen. Other questions? Paper silver does not conduct electricity, Robin Kelly says. That is a good point. There's nothing like owning the physical. I got some shot or some scrap that Dumb Money Media gave us. Dumb Money Media, by the way, has a new video out. I retweeted it, his video. He's got another meme video out. You guys should go look at it. That was thanks to Dumb Money Media. Go look at his YouTube channel, Dumb Money Media, and look at his videos. They're awesome. I love them. Appreciate his support. Good questions. 1.6 trillion looking for a home in the reverse repo. That's right, Ralph. 1.6 trillion. They printed so much. There's so much in that reverse repo market. It's too much liquidity. And I think that we're in the eye of the hurricane there, because remember, we didn't have enough. Now we got too much. What happens when we don't have enough again? That repo market's a mess. And by the way, when they went back and analyzed, I think it was the Economic Policy Institute, I forget, some one of these like think tank type groups went back and analyzed the 2008, 2009 crash, and they realized that the repo market was the first sign back then. They just didn't. So we know that when the repo market comes under trouble, we're in a debt-based crisis. That's how I know we're in a debt-based crisis, because that's what happened in 2008, 2009. The repo market started having major issues about a year before, year and a half, somewhere around there. And then it came home to roost in the housing market and the mortgage security market. Well, guess what? We had repo issues. Was it late 2019? And we've had them back and forth about a year and a half. And now I think that's a sign that the debt market has all sorts of problems. It's out of balance. All right, going back to the poll, 104 votes, 84% said they're protecting against debt collapse with precious metals. 11% says cash, 4% cryptos, 3% remote prepper. Compound. David Lopez says, hello, everyone. Big shout out from Eagle Pass, Texas. Thank you, David, from joining us from Eagle Pass. I appreciate you, my friend. Ultra Baron comes back in with another question. After all the money printing that the U.S. government did to bail out the stock market and the job market, do you think they will just give up in 2022? No, I do not. But I think it's the end of the game where the money printing and the debt creation starts to collapse in on itself, the house of cards starts to collapse. And we're seeing it in China. You can only run that system for so long before it collapses. 100% of time in history. We're at that point. We're at that Minsky moment before the last crack up, boom, melt up is where we are. We're getting close, guys. We're getting close. Dude Boy says, hey, Rob, was a LIBOR to SOFR thing supposed to kick in January 1st? I have to go back and look at my notes. I believe it was sometime this past year, or maybe it was January 1st of this year. I know it was coming up. I know that they had already developed the SOFR market. They're trying to trade it, that derivative market, and get it going. I don't know if it has a right amount of liquidity and trade in it at the moment. So yeah, it's probably running right now. It's not full steam ahead. It takes time to develop a derivatives market. What they're doing is they're moving from a LIBOR, which is a committee approach, to allowing the market to decide through derivatives. But it takes time to build up that derivative trade. It's not something that happens overnight. So I think they're probably still relying, not completely on SOFR, but LIBOR or a LIBOR proxy at the moment, I would imagine. And it'll take time for that to occur. We also know manipulation occurs mostly through the derivatives markets. Derivatives markets is how you manipulate. So what they're going to do is try to manipulate interest rates using SOFR. They're going to try to manipulate interest rates using SOFR. They're going to, in other words, why did SOFR come about? They're trying to manage the Titanic sinking. They don't want interest rates to rise too fast. That's why the derivative market in SOFR exists, is to control that as a signal to economists that, hey, we're doing okay. We don't have massively rising interest rates. So SOFR will be for like the third party rates, the rates that determine loans to individuals, to consumers, to businesses. And then the federal funds rate is what you use, for the banking system. So the Fed's going to control the banking system rates, and they're going to try to control, using SOFR, all the other rates. That's why that system is coming about. That's clearly why it's coming about. Shannon Wright says, Rob, did you catch Raffle Farbo video about the silver charts regarding the coming silver? He's had a bunch, so you have to tell me which ones. I don't get to watch all his videos. I have so many people that I follow. I'm just behind on videos. I was talking to David Morgan on the phone last night. He has an excellent interview series talking about a lot of things. He's talking about crypto and the stable coins. I haven't gotten to that yet. I told David last night I will get to that. So perhaps on my plane flight out to Denver this week, I'll go over some of Rafi stuff, and I'll go over some of David Morgan's stuff. It's all great stuff to watch. And as a reminder, we're going to be in Denver January 8th. That's this Saturday, 4 to 8 p.m. Denver time, at Loaded Bar and Grill in Denver, near Union Station. Myself, Economic Ninja, Wall Street Silver, Financial Fitness, Nobody Special Finance, and who am I forgetting? Heresy Financial, Joe Brown. We'll all be there. Now it's maxed out. So if you haven't registered, we're not going to let you in the door, because we basically are putting enough, as many people as we can fit into that place. So we had to close registration down yesterday morning. It'll be a full house though. It's going to be a lot of fun. We will be making content. So if you're not there live, stay tuned, ladies and gentlemen. We will have content coming out on all of our channels on that. And it's going to be a fan appreciation event, not charging a dime, no sponsors, no commercial messages, just us meeting and greeting the good people in Denver and those that come out to see us, and doing some video content for the channel. So if you can't make it, stay tuned. We'll have it. It's going to be a lot of fun. T. Corsi comes in with the super chat. Thank you, sir. He says, I'm 15% into PMs, 50% in investment real estate, 20% in PM miners, and 15% tech growth. I want to trade my tech growth for fertile land. I like North Colorado. Do I get out of growth? Well, I'm not your financial advisor. Let me do my disclaimer, and then I'll tell you what I would do. Not your financial advisor. Please don't take what I say. Don't trade on it. Do your own due diligence. Contact your financial advisor, all that good stuff. That being said, yeah, I'd probably get out. Well, the thing is here, I would get out of tech growth, but you may be, I think there's going to be another melt up. So you could probably stay in it longer, probably make more money. But for me, I like the defensive invest and cycle invest, because over the long term, rather than trying to time the market, you'll make more that way. Like I got out of real estate a couple of years early, but it's okay because I put it into, growth assets or in a major bull market. I'm going to be okay over a 5-10 year period. So yeah, I might move out of tech growth and fertile land. I think fertile land is going to be one of the best investments in the next 10 years, because there's a whole lot more people, and fertile land where you can raise cattle or grow crops is always going to be of value. And historically, it's probably the best single investment you can have over like a 20-30 year time frame, given population growth and demand. Even better than gold and silver, I would say. In some cases, depends on the time frame you look at. So you could definitely do that. Now, is the timing of getting out of tech and into some of these other assets? That's up to you. You got to make your own decisions on that. It's really hard to time the market. I got out my real estate early, and it's okay. It's okay. I'll go back in. I'll make a killing. Once the real estate crashes, I'll go back in and make a killing. It's okay. You know, it just depends on what you're comfortable with, what your risk tolerance is, your risk appetite, your timing, all that kind of stuff. You have to answer that for yourself. But I don't think it's a bad plan at all. I would definitely, if it were me and I were in your position, I definitely would do it. Is you just got to figure out when you want to do it. And remember, consult your financial advisor. Don't take me as a financial advisor. I'm not. I am just a dude on YouTube with a cowboy hat. The Federal Reserve won't be used. No, won't. Okay. The FRN won't be used in 10 years. I agree with you, Chase Wilson. This chat is for vaccinated only, right? Says Shane. No, we generally don't talk about COVID here because of the censors, but no, you don't have to be vaccinated to join. I know you're being facetious, but I wanted to answer that. 272 people in. Thank you guys. I appreciate it. We'll get to the super chat I just got from Ultra Baron here in a minute. Wanted to recap what we've been talking about. Evergrande shares halted, at least for Monday and Tuesday on the exchange. They had to tear down 39 buildings in the Hainan province, Hainan area, because they were unsafe. They're trying to pay back their wealth management with customers principal, $1,200 a month. I don't think they'll be able to do it. They defaulted again for a second month in a row on their bonds, although they do have a 30-day grace period. I think the Chinese will probably at some point have to bail them out and think they're going to do it via the back door. I think they're trying to do it via the back door right now. If the Chinese do it publicly, it calls into question all sorts of problems with Chinese debt market, Chinese property market, Chinese currency, and it would start a worldwide run on a lot of junk bonds and debt in the system, not just in China. So I think they're managing this very carefully, let's put it that way. In the vote, in the poll, 119 votes, 11% are preparing against debt collapse with cash, 80% precious metals, 6% cryptos, and 3% by doing a prepper camp compound or having prepper supplies. Ultra Baron says, using your influence to push your own silver spot price along with the other silver experts, did it ever cross your mind? Well, if I could push the silver price, that'd actually be nice. You know, I would say this, the most influence I ever could have had on the market was when I wrote for Seeking Alpha. There were, at the time I wrote, maybe 10 million people coming every month. Now I think there's 20 million and there's about 6 or 7 million subscribers. The average person that reads Seeking Alpha is an accredited investor. They make about $371,000. So you're talking the top 1% of people in America. When I wrote an article there, I almost never invested in what I wrote in beforehand. I might do it after, but I almost never invested and then wrote an article to push it up. At least I never tried to. I never did the pump and dump stuff. But when I wrote an article, I wrote one article one year in Chile, and I looked at a lot of investment classes, a lot of investments in Chile. 3 months after I wrote that article, everything in my article had popped. Literally every investment I had. Apparently word had gotten out. And so that's the type of effect I could have on the market. If I wanted to affect the market, I'd go write an analysis for that rag. And I guarantee you it had more effect. Now, I've been talking about silver strong for about a year and a half now on the channel, and it's trading at 23 bucks an ounce. So I don't know, does what we talk about in Arcadia, David Morgan, Mike Maloney, and all the other PM investors actually move silver? No, because it doesn't affect the derivative. It does affect retail sales. It does affect investment demand, I'm sure. It hadn't touched the damn price. I mean, we were sitting in February, touching 30 bucks before Rostam Benham admitted to putting a halt on it, CFTC commissioner. And once it come down $7 and we're sitting here almost a year later, did it ever cross my mind? Sure. Does it work? No. The last year's fucking proof. But good question. I appreciate you asking. It was a good question. Now, to answer that question more generally, because somebody talks about an investment, are they automatically trying to talk their book and pump it up? Well, yeah, we all have interest in things. It's like a club. We're talking about stuff we like, just like this Cowboys jersey right here behind me, 𝙁𝙊𝙇𝙀𝙊𝙎, right there. He's my favorite Cowboy player. Yeah, I do want people to watch the Dallas Cowboys, you know, but that's just because I'm a fan. I'm a fan of gold and silver because I think it's good for people to have during crisis times. I think it's in a major bull market. Do I think any single video I put out is ever going to affect the price? No. Do I think it's raising awareness to help more people get in cheap? Sure. 100% absolutely. That's why Ultra Baron, 99% of the stuff that I do is free. I mean, if I wanted to make money, I could just run a newsletter or I could write for Seeking Alpha and do one of their marketplace services and make a lot more money. Or I could invest in stuff and then write an article and make a lot more money. That would be a much faster way to do it. Precious metals is not one of those areas where you can do quick pump and dumps, especially in the physical, because we don't control it. The derivative market players do, and most substantially in that market, the bullion banks. It's very clear by looking at the data. Now, I realize I haven't done one of those videos in a while, except for my Patreon people that support us on Patreon. I do that once a month. I was just talking to my team today. I'm going to bring back those videos where I talk about the COMEX and I talk about how little control we have over it and who actually does, as you can see in their trades and in the positioning of the traders on the COT report from the CFTC. I'll bring that back and we'll talk about who actually controls that market. It sure as fucking hell is not Arcadia Economics, Gold, Silver Pros, David Morgan, Mike Maloney, and the bunch of us. I guarantee you we want higher than $23 silver prices and higher than 1808 gold. And if we could control it, we probably would try, but that would be to benefit people that already own it, to protect against the wealth destruction of the dollar. But I guarantee you we have absolutely zero control over that market. Thank you very much. And when people talk about their markets, it doesn't necessarily mean you're trying to pump and dump. We all do it. I mean, there are tons of investment magazines out there, investment services, investment shows on CNBC, radio shows that talk about investing. It's just because we like talking about it. Cheshire Yeoman says, I think you and the boys might be affecting the silver squeeze, not the price, but a lot more people are buying holding PMs now. I 100% think you're correct, Cheshire. Good point. And that's really what we want. That's really what we want, is to get people to own it. And eventually we hope it does pop, but we want everybody to get in cheap. Fantana Ranja says, Rob, let's hear your best cattle auctioneer impression. I've never been an auctioneer. You know why I wear the cowboy hat? It isn't just stick for the channel. Honestly, it's not. My family grew up on farms and ranches in Texas, mostly. My mom and dad, or my mom grew up during the Great Depression. My dad was actually 10 years older, and he actually fought in the Great World War. He was on the second wave of Normandy, D-Day. And he was communications officer in the Navy and also medic. And that's why he was second wave. He was communicating during the first wave. And then the second wave, he came up and was trying to help people, you know, once they had secured the beach. And then, of course, he marched into Germany like a lot of people did for logistical support as a medic. But a lot of my family grew up during the Great Depression, my older part of my family. And I was born in 74. I was a surprise to my mom and dad. My mom was 50 at the time. My mom was 40. But we had a history of people working on ranches and farms growing up. And I was lucky enough to see some of that when I was a kid. You know, I grew up in the city. I grew up in the suburbs of Dallas, Fort Worth. So I wasn't born on a ranch, but during the summers, I got to go down to the ranches and the farms and milk cows, pick cotton, fed the horses and pigs, went hunting, went fishing, all that good stuff. But what I really admired about that lifestyle was the morals and the values that people brought, who people were. And that's why I wear the cowboy hat, is to honor that system. I wasn't born a cowboy. I'm not on a ranch, you know. I'm not an auctioneer. I'm not a guy that can rope cattle, but I appreciated what my family had done and what people out there had done, raising food, living an honest life, you know, all those types of things. And I honor that by doing, you know, by wearing this hat. I don't just wear it on the live stream, I wear it out sometimes, because we still do that in Texas. And it's to honor that culture really more than anything. And the people that stood for those values as a part of that culture. I'm not going to do a cattle auctioneer call. Well, actually I might. Let me practice it before I do it. You're putting me on the spot here. Sarge says, Rob, so bonds go boom. Yeah, eventually I do. I think this is the first major strike. It's Evergrande, is that property development market. I think it could be Deutsche Bank still, and though they deleveraged out of some of their problem child investments, it could be in, I've often said, I think I wrote 10 years ago on Seeking Alpha, I thought it would start in Europe. I didn't think it would start in China. But I think the big booms could start in Europe. They're in a big ass mess over there. Big ass mess. Negative interest rates, the whole nine. It's a mess over there. Fazdal says Virginia is a good state to bug out, even though it's kind of blue. Yeah, another one. If you look at Joel Skousen's strategic location, Texas, I think in the top 5 to 7. Idaho, I think last edition I had was number 1. But you know, Montana's up there. Utah, Nevada are in that category. So lots of good places if you want to bug out. Colin Gooch says, don't stop stacking. I agree with you, Mr. Gooch, golfer extraordinaire. John Bethea says, Rob, I think your family members who served the military, especially the ones who fought in the war. I agree with you, and especially the Great War, World War II. You could argue that Vietnam and Korea were boondoggles by the US government. I don't want to denigrate the people that fought in that war, but politically speaking, we probably shouldn't have been in them. You could argue that either way. I'm not going to take a stance. But the last war in which I think we had to be in was World War II. It took everybody to stop that mess. And, you know, my family's originally from Germany and came over in the 1850s. My father was living in Columbus, Ohio, sort of in the little Germantown area of Columbus, Ohio, when the Nazis were destroying what was traditional German culture. And in Columbus, Ohio, all the German descendants, regardless if they've been born or naturalized here and how long they've been here, were the first to volunteer to go to war, to go back and take Germany back, because it wasn't the culture they remembered, the culture they came from, and they felt ashamed of it. Not only they felt ashamed of it, they were pissed off at Hitler. He was destroying German culture because German were basically a good, loving people like anybody else. It's just an extremist had risen to power. And, you know, unfortunately, some of the good people of Germany had allowed that. So, yeah, I mean, I do appreciate what my dad did because he was German and he stepped up first to the plate, you know, and that says something about his character. And, you know, the character of my mom and dad, they're very good people. And I'm thankful to have them now. They both passed away from cancer a long time ago. And I don't have them here now, but I appreciate the lessons they taught me while they're here. And I think it's led me to doing what I'm doing now. All right, guys, we're about done. We have gotten the super chats blown out today. Thank you, everybody, for doing that. Thank you, everybody, for asking the questions and being involved. We're up to about 300 people. This has been awesome. First live stream 2022. We hit it with a bang. We're talking about the start of the housing bubble collapse around the world. I'm calling it right now. This is the start. Now, it will take a while to play out. It's going to reverberate, but it is the start of this. And it could be a year or two before the whole stuff hits the fan. I don't know, but this is the start. This is our worldwide Lehman moment right here. It's starting with Evergrande and Cynic and the Chinese property development market. It's going to spread. They're not the only ones having trouble. And I'm calling it here right now. First live stream, January 4th, 2022. This has been Cowboy Metals. We broadcast from the great state of Texas. We honor those cowboys that came before us, the lives that they lived, the sacrifices that they made. And we take no bullshit on this channel. Thank you, everybody, for joining. I appreciate everybody for supporting the channel. We've got more coming up. I got a good interview coming up for Thursday. And remember, I promised tomorrow I would do a breaking usually comes out in the morning sometime when I get around to recording it, segment, breaking premiere on what's economic data we've seen this week. And it's not only real estate, we've started to see some manufacturing weakness. And we'll talk about that tomorrow in a breaking segment. It won't be a live, but you will be in chat. We'll put the chat up on and make it a premiere. Stay tuned for that tomorrow. Thursday, we have an interview on the channel and we're pressing along. This train is a movement, as my grandma used to say, you better get on it or get left behind. Thanks everybody for supporting us. This is going to wrap it up. This has been Rob King Gold, silverpros.com.